Hello and welcome to Crypto Weeklies. In this video, we are going to analyze Chainlink and its token Link. None of the content is financial advice. We are starting with the crypto risk analysis terminal. This is part of the portfolio analyzer or the portfolio builder part of the Crypto Weeklies homepage on the website. This portfolio builder takes into the account several things. So this analysis, again, as mentioned, is the gem zone or the high return, low volatility uh, peers of the asset class, where in the top left corner are the gems of the asset class and the bottom right corner are the danger zone, where the volatility is high and returns are negative. So where is Link right now? Link is on the boundary of the gem zone. It's still a gem of the asset class. If you look at over here, try to zoom it slightly. It's on the boundary over here. You can see it's right on the bottom of the gem zone. Again, ETH bounces off the boundary quite frequently. This is since 2021. What is the annualized return of Link? It's still positive 16%. Volatility is 90%, and Sortino ratio is 0.27. It's still positive, but it is a lower number than, for example, Tron or Bitcoin or BNB or even Bitcoin Cash and XRP. So how is this calculated? The y-axis as this annualized reward, x-axis is volatility, Sortino ratio is the tooltip, the score of return versus downside risk, maximum drawdown, again worst possible scenario. The smaller the drawdown, the percentage is that is safer. Overall, again, if you look at the composite ranking of Link as compared to its peer, it's at 0.54. That means it's not the worst asset to hold, neither is it the best asset to hold. It's kind of in the middle of the pack using analysis since 2021. Right now, price of Link is at around $8.37 in 2021 at January 1st of 2021. Again, this is where price action kind of took off. The start of the price action again in 2021 was at around $11. Right now the price is slightly lower than that, but again, annualized return again takes into consideration over here. It rose quite a bit in 2021, then dropped quite a lot in 2022, and directionally it has trended up with time, then down with time. That is again evident with respect to if you draw a straight trend line. We have a chart to describe that better on our own website. Before we do that, we look at the current. This is weekly. This is the current 200-week simple moving average, which is at around $12. Whenever this blue line turns white, that means the price is lower than 200-week simple moving average, which is the case right now. And also this green line, which is the 300-week simple moving average, when it turns red, that means the price is lower than the 300-week. Whenever the price is lower than 200-week and 300-week together, it's one of the cooled off times in the asset class. This is again another analysis where again the series of higher lows and higher highs, that foundational support lines that Link enjoyed essentially since October 2023. 2 years later, in late October 2025, this trend line, which was at that point in 2023, was at around $6.60. It rose to at around $13 in January 2026. Ultimately, this area of support got broken down, as one would expect in the bear market year, that is the typical bear market years of 2022, again 2018 as well. Link was around, but it wasn't that known asset back then. It rose into fame in 2019-2020 time period, when it started outperforming some of the major assets in the depths of that bear market. So now Link is at around $8.40. It's still not at the range lows from the Fibonacci levels perspective, drawn from 2021 high to 2022 low. What could happen this time around if the bear market stays prolonged? This lower area of support at around $5 could come into play. That's just an interpretation of all of these models. But at this point, with again just the title of the video, is it an accumulation phase? But some of the indicators are saying yes, the 200 week, 300 week simple moving average price based trend, the general lows that Link enjoyed in the 2022-2023 bear market for Link is not too far away from the current price action. If we take that logic and say how low is the current price of $8.30 away from this range low, it's within the grasp of last 30 to 40% drop from over here could be manifested in the worst case scenario in this bear market if the lows of 2022-2023 for Link were to be held in 2026, which is a likely outcome, but again there is no such thing as a sure thing. For now, as Link is on the bottom of this gem hunter portfolio, it's not in the top 10 mix. You can see it's not within the top 10. So the first 4 are over here, number 5, 6, 7, 8, 9, 10. So Link is somewhere over here. Again, even if we weight it by market cap, it does not belong in the gem hunter portfolio, which is again market cap heavy. Almost 50% is assigned to Bitcoin, then 12% to BNB. Similarly, XRP, Sol, and so on. Even ETH, for that matter, has not featured over here, as ETH risk is also composite risk is at around 0.5. This is again one interpretation of the model. Again, this is one of the models that helped identify what could be a theoretical risk reward in the asset class. Overall, if we look at the composite risk model for Link using all of the models that we have at our disposal, the first chart that I showed you was heavily influenced by this second part, not the trend and valuation, but the market cycle related metrics drawn on from all-time high volatility, beta and Sharpe ratio, which is about one could say about less than 40% weight of the overall composite risk ranking. Composite risk ranking at this gauge chart level is largely driven by logarithmic regression based deviation, time weighted average price based deviation, and 20-week simple moving average price deviation. Together, almost 60% of weight. For this model, Link is in an accumulation zone where the risk is less than 0.3, but it's still, again, if you compare the risk of Link with BTC risk and ETH risk, it's exactly the same. So it's kind of a toss up whether to accumulate Bitcoin, ETH, or some of the lower cap crypto which haven't had a composite risk lower than Bitcoin or ETH. So that's kind of a argument whether this time the Link risk is lower than BTC and ETH risk. So that is one of the key consideration, because if again the risk or to accumulate a higher cap asset is same as a lower cap asset, just looking at the summary level, it's one could argue that it is always better to again, not financial advice, or always better to stick with some of the higher cap asset, as they do not have that kind of irrelevance related risk, especially if the industry were to stay relevant. As we look forward to the overall social sentiment, again this is summarized over here, but if you want to see it in the full screen, the word cloud again over here says again some of the latest unfortunate scams of the asset class, but more or less again as the comments in the comment section are this is derived from social media related platforms such as YouTube and X, and last 7 days worth of activity. Most of the activity is related to Bitcoin, and then again the buy signal as well as some of the price related signal, and the bearish sentiment has kind of died down over the course of last 6-7 days, but still again the bullish sentiment is not here yet. The overall social sentiment risk as the asset class, again you can see the number of monthly views are trending down especially since January 2025. The peak occurred for this asset for this market cycle in December 2024 itself. So since we are almost one and a quarter year away from that euphoria phase, you can see the social sentiment dying down has reflected into a social sentiment risk now going into the lower in the higher 20s. Again, ideally it should be for a bear market accumulation, it should be closer to that 20. So that still is ahead of us. That kind of a risk reward is ahead of us, especially as we go deeper into 2026. Right now, if we start with the individual components of this composite risk based analysis, what we find that for Link, especially the time weighted average price based signal is on now. The time weighted average price is easily understood that again the effect of gravity of time. So this indicator, unlike most indicator, look at not just the current price action but also help identify where the price has spent its entire life. So if you look for a smoothened function of price action, where again, if let's say an average cost basis of long term time holders, if you want to again look for that average price and try to beat the clock wherever the price is in accumulation phase, like for example when the price is lower than the blue line, that is essentially beating the clock by entering at a level where the market has historically spent very little time. Fair value is closer to the equilibrium, and overvaluation is any time when the price is going through a multi-year bull market like it enjoyed from 2019 till 2021, or even from 2023 till 2025, where the price stays elevated from the time weighted average price. This is again trying to filter the noise, try to build the time in the market advantage, and dynamic scaling based on risk levels. Right now the risk levels are in this purple shaded region, that is risk level 1. The deviation between the price and the time weighted average price is negative 20% right now. So that means again the highest that Link went in the 2023 bear market was 42% down from the time weighted average price. Again, a 30% down from the time weighted average price is not the worst time, but again this time around in early February, the lows were at around negative 26%. Now it's at negative 20%. Let's see how this manifests in the next half of 2026. But this indicator has flashed a buy zone for Link. Going through with other indicators, the regression risk indicator right now, again, that's the one that needs to find a major bottom for the regression risk to go low, and this metric is almost 1/4 or 25% of the weight of the composite risk. What typically happens in the bear market, again, not financial advice, typically what happens is the price goes lower than one standard deviation residual drawn from the fair value. This is the green zone over here. That's where the major bottoms have occurred. Again, back then, as the price was or the fair value function was a rising function of time with time, that means the pink line was going ahead as the price as time progressed. But since about 2023, this has had a negative bias. So essentially, instead of going as low as about the green line, at least the midpoint between the pink line and green line would necessitate a drop in the risk levels. You can see that in the 2024 downturn, the green line offered an area of support. So for now, that area of support is all the way at around $4.33. If we go by the midpoint logic, the midpoint is at somewhere close to $6. So a $6 Link, again, if you go back to this hypothesis, if there is a drop to a $6, that would be about a 30% drop from the current price. Whereas the worst case scenario is all the way about 40% drop from the current price. So that's again the reason why the regression risk is again kind of elevated. It's sitting at the fair value per the regression model, but not deeply undervalued. You can see that or visualize that in a better way using the DCA model, which is again a variant of the same regression based risk model. Is instead of looking at the weekly candles, this is a daily level, and whenever this territory goes into the purple zone, right now it's in the second best time zone for DCA for Link. The regression risk is 0.14. If it were to fall less than 0.1 like it did for the most of the bear market of 2022 and also even the recovery year of 2023 and some part of 2024 as well, that area for Link has still not come into existence in 2026. So that's something to look forward to. per this model. How low can Link go? Again, it's anybody's guess, but if it bottoms somewhere at around 0.15 risk, then the low for Link could be slightly under $5. If it bottoms at 0.2 risk, the low could be at around $6.25. So those are the two scenarios per the regression model. The 20-week simple moving average price model also, again, I would imagine this model to not trigger an undervaluation zone like it triggered back in May 2022 or even in February 2022. That's because, again, the euphoria for this cycle was missing. So the peak for Link did not occur like it in 2025 like it occurred in 2021 with three distinct red zones over here. In the peak of 2024, the risk levels were in the orange zone at around 0.83 risk, whereas in 2019, 2020, as well as twice in 2021, the risk levels were higher than 0.9. So this again model might not trigger the ultimate bottom signal. Nonetheless, the machine learning based price analysis says that if the market were to stay bearish for next 4 months or so, Link could find a bottom at around $5.40. Whereas if the market downturn lasts for around 6 months, then the bottom for Link is close to that $4.25, and that $4.25 bottom for Link again could be slightly low than what Link did in 2022-2023. That's the worst case scenario for Link, which is about 40% down from the current price. All in all, if we were to conclude on a hopeful note, what Link could do in the next bull run, again you can see over here $70 to $71. That's the bull case target for Link. The bear case bottom, as estimated by the risk-based models, the worst case scenario going to $6 per the aggregation of all of these risk-based models. That's about 30% down from here. The base bear case is right now the current price is was the base bear target. The panic case is about 10% away, and the worst case is at 30% away. That's just what you can say, an estimation of risk-based bottom, whereas the estimation of risk-based top for Link or ceiling for Link is at around $70 to $72. Stretch goal at around $115. If Link bottoms at, let's say, $5, a rally to $70 from $5 is essentially 12.5x, sorry, almost 13x from that bottom to peak. With that, I would like to conclude. Hope you enjoyed the content. If you did, please give a like and subscribe, and check out all of these charts on cryptoweeklies.com. That's my own website. All of these charts are available for free. Several thousand hours went in maintaining and building this site. So if you enjoyed the content, you can check it out. All of the charts are live, not just for Link, for all major cryptos by market cap, also indicators such as social sentiment, heat map, correlation, portfolio builder. And we are always in the process of developing newer and better indicators to identify what's happening in the overall asset class, which cryptos are kind of holding the asset class together, what's the as mentioned previously, the risk meter in terms of some of the higher cap cryptos, especially the older ones which were active since 2017. How are they looking on their risk journey? What are some of the popular narratives that we just saw over here? Heat map we just checked. What is the overall market cool off signal? How low has the market, again, the asset class gone? 16% complete. If it goes less than 10% complete, it's essentially closer to the bottom of the bear market. So similar analysis are all available, not just on its USD pair, but also on its ETH pair for some of the altcoin, and some of for on their Bitcoin pair as well, and also some of the lower cap cryptos that we analyze from time to time, and also ETFs and proxies are all available. So hope you check them out, and hope you enjoyed the rest of your day, and hope to see you again tomorrow. Thank you and have a nice day. Bye bye.